All right, folks, welcome back. This is our midweek review for the ICT mentorship. This is the dollar index daily chart. You can see we did trade again below this sell side liquidity pool. A little bit deeper on that pass below this one here, and now we came back up into the range. Now, it needs to stay below this order block. If it trades back above it, it shouldn't even touch it. Okay, it's actually a bad thing for it to touch it now. And you're probably going to ask, why is that a bad thing? Well, it's because we've already hit it here on this candle, here on this candle, and on this candle. So we had 3 times hitting it and then moved away and took sell side liquidity. We have taken sell side after moving away from the order block and came back up into the range between the order block and the old low it took out, which is this one here. It's better for it to completely reject any of this rally here and not trade back to the order block. But if it does trade back to it, it's actually bullish, and we may see it trade back up into this area here. Okay, so it will need to immediately come back down and reject all this, which it may not do, but from a rule-based standpoint, that's what it needs to do to trade back to the bearish order block here. That's actually a bullish thing. We don't want to see it come back to that. The reason why is because it's taken sell side liquidity, and it should consolidate, maybe come back in a little bit, but not this much, and come back to the order block too. That's not what we want to see, because we've been staying in this range in here, and for it to come back there, not required. Okay, and for it to go there is problematic for near-term bearishness, and we'll probably need to come back up in here to trade back to this old high, maybe just a little bit above it, for a institutional order flow entry drill, or if not, the consequent encroachment. Then we'll see if it has anything in store for lower prices, make an attempt this run here. But right now we're studying between the order block here and the low it's swept, what price does in between those two levels. I'm not sure basically, so I'm waiting to see which it hits first here, or if we start to come back down towards this low again, then I'll resume my bearishness looking for this low. Hourly chart for dollar index came back up, took buy side liquidity. We do have low resistance liquidity signatures here with the lower high to the right of this one, and then the order block high back here. So if it goes there, again, that's not good. It's probably going to go higher and attack the buy side liquidity above here. We have 2 fair value gaps in here. One we filled in today and rallied back up, and now we have one here. If we drop back down in and then rally from there, anticipate this high being taken and going through the bearish order block. 15-minute time frame dollar index. Here's that lower fair value gap, and the higher one's up in here. Just barely moved above for the buy side liquidity there. And again, all of this run below that old low, which is this level here. Attempted to go lower, 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 and then rallied today. So we had a nice optimal trade entry long in here for counter trend, and then rallied back up into buy side liquidity there. All right, euro dollar daily chart. We ran back to the last up close candle here for a bearish order block after completely closing in the fair value gap. Hit that rather nicely and then sold off today. We have sell side liquidity resting below here and that old order block. Again, same thing, just reversed what we talked about in the dollar index. We don't want to see it trade back down here. If it does, it's actually bearish, and we'll probably need to come back down into this area here as well. As you can see, there's really no more. I wanted to take these little execution markers off, but you can see there's never been another trade after that one I showed you, so the account really isn't blown or harmed. All right, the hourly chart on euro. Consequent encroachment today after running from the bearish order block on the daily. Optimal trade entry, sells off, bearish order block here. This will be an optimal trade entry on the 15-minute time frame, as you'll see. We have a large pool of liquidity resting below here for sell side, so that might be problematic for continued upside, but it needs to obviously shake all of this off and keep all of this price range intact and not come after this if it is in fact bullish. If we go lower than this and attack here, then we're probably going to have this high for a while, at least 3 to 4 weeks. 15-minute time frame euro dollar. You see here we have that high, that low, optimal trade entry in here. right in there, and its consequent encroachment of the fair value gap on the daily chart. So you can see we had a really nice sell-off there, attacked the sell side liquidity there, and now we have a remainder of sell side liquidity resting below these relative equal lows here. So that might be what we look to go for on the downside. On the upside, we have this area right in here. So if it trades up here and then starts to falter, then we'll be expecting this level here to be taken out on euro. British pound daily chart. This one here has been a little funky, and I have not been really interested in this one. Nothing in here that's terribly exciting. I don't like any of that. Sell-side liquidity resting below here. It looks like it's the next to go on the downside. Upside looks like it's pretty capped for right now. Swing highs, just doesn't want to go after that old high there. Hourly chart, imbalance in here. Sell-side imbalance, buy-side inefficiency. Came back up, almost completely closed that in. Now I'm going to drop into a 15-minute time frame. That's actually going to be a little bit different. So these red lines here will disappear, but just be mindful of that range and the obvious sell-side liquidity pool here and here. It's been mixed, so it's been trading like I've expected it to do, but this is the reason why I've been staying away from it and not trying to trade it. Fair value gap here, and in this level and this level, these red lines are not that hourly sell-side imbalance, buy-side inefficiency. This is actually optimal trade entry. So I'm showing you the range high to range low, 62, 79% respectively. Extend that out in time. You can see that is what we basically reached up into. And notice the bodies of the candles respecting the initial sell-off in here for sell-side imbalance, buy-side inefficiency. Beautiful delivery in the signature of IPTA. Yes, there's little wicks in here, but that's not the storyline. The storyline is look how it's working inside that imbalance. First one here didn't completely close it in. Then today we did close it in. Sold off. Optimal trade entry in here. Consequent encroachment of this small little fair value gap in here. I don't have it noted because it'd be too much and too busy in here for the chart. Then sells off for New York open, and then another later one in here for London close time frame, and then sells off for a run below this short-term low here. And that is going to be it. Keeping it real short and sweet. I will touch base with you tomorrow for the daily log entry. Until then, be safe.